But another cynosure of the market today is L&T Finance, 5% up. Perhaps on the belief that the Q1 disappointment is on account of Ind AS accounting changes, which actually are positive in terms of corporate governance, and there is no harm to the operational metrics of the company. Dinanath Dubhashi, Managing Director and CEO of L&T Finance, joins us now. Good morning, Dinanath. Thank you very much. First, if you can explain the Ind AS impact on the overall balance sheet in terms of assets under management, help us understand the quantity and quality implications.
See, in terms of AUM, the impact is actually very small. That's not much. See, Ind AS has affected business in various ways, in all aspects, like in terms of AUM, in terms of valuation of investments, in terms of taking ESOP cost, pref shares, etc. All those are a matter of restatement, and we have done that. The most important change actually is in ECL. And I can clarify that if you want. It is the impact is more in terms of the way you recognize the stress and the way you recognize the costs, the expected credit losses. So stress, for example, you recognize not only what is NPAs, but you recognize also what you believe is incipient stress. And that is what we have done. I mean, we always used to say that though our wholesale NPAs are just about 2,000 crores, we believe that the entire legacy portfolio, under stress is about 5,000 crores. We have gone ahead and in line of highest level of governance and transparency, we have actually gone and classified the whole thing as stage 3. Second part is to take care of this 5,000 crores, there would be about 3,000 crore of haircuts or provisions which would be required. Till now, over the last 2 years, we have been making rapid provisions of about 1,200 crores, and we were going to make 1,800 crores in the next 6 quarters. As we have moved to these new standards, we have actually taken the whole 1,800 crores in, straight away to the net worth. And where we stand today, that the whole stress in this infra portfolio is not only recognized, but also provided for adequately. And that's the importance of Ind AS for us.
Okay, so what was the comparable gross NPA movement under Ind AS on a quarter-on-quarter basis, if you can tell us?
So this is not gross NPA. As we said, this is gross stage 3, which is not only NPA, but also assets where we have a regulatory forbearance to not classify it as NPA. Also standard assets which are below 90 days, but we believe there is incipient stress. That is what we have classified. And we have also given the like-to-like number for the last year first quarter, which was 7,600 crores around, and with 11.7%. So that has improved from 11.7% to 7.9%. And because the provision coverage due to our formulae have gone up from 51% very conservatively to 62%, the net stage 3 has actually reduced from 6.1 to 3.2%.
Okay, that's a little complex to understand. Put it this way, Dinanath, if it were not for Ind AS, where would your profits have been?
See, it is not possible to do that comparison because it is not, we have not done only the IGAAP to Ind AS translation, right? We have also taken this big chunk of provisions from the opening net worth. Then we have made huge provisions this year based on the formula. We have, we have made 90 crores of additional provision for unforeseen event risk. So there are so many changes that this kind of comparison is fairly useless. What is important is Ind AS restated number last year is some 313 crores and 314 crores, and that has increased to 538 this year. So that is the only comparable number really. As we go ahead, we will keep giving for every quarter.